Congratulations on your call yesterday, 50 basis points. Not just that, but you also were very explicit, saying that they would not really give any explicit guidance. And so that was absolutely spot on. The hard question, though, I suppose now is, does this set some kind of precedent for the Fed? What is your expectation?
Given that I thought the Fed was always going to stick with 25 basis points next week, it's tempting to say it does set a precedent. They're going to stick with the tone. But I think that the Fed was going to do 25 basis points regardless. I guess what I'm trying to say is, yes, this sets a precedent for the Fed, but it's not like the Fed are taking their signal directly. They are playing two separate playbooks, but they both reach the same conclusion. And that is the fact that they've got other tools to tackle financial stability. The financial stability risk is a little bit overhyped at the moment. I am not trying to downplay the incredible turmoil we've seen in markets this week. I'm not trying to downplay the fact that we've seen banks on either side of the Atlantic in trouble. But this is very different from systemic risk. It's very different from the financial system breaking. To compare, in 2008, I was taking money out of a cash machine and hiding it around my house because I thought ATMs might stop working. We're nowhere close to that right now.
Right, yeah, I was worrying about digging up my garden to plant food. Yeah, so with that benefit of hindsight, or with the long lens of history, I suppose, it helps us get some context here. Let me ask you about First Republic and what you make of the action being taken here. This is quite fascinating, making this maybe the sector's problem, financial services problem, getting other banks to put money into this business to shore up confidence in the sector, rather than using, as we would have seen in 2008, public money to do something like that. We'll wait and see whether it's effective, but it's an interesting new development.
Yeah, look, I'm still trying to work this one out myself. I think kind of Bill Ackman's got a point that, like, maybe this might be a little bit of a sticky Band-Aid, and it might be better if the Fed came in. But I guess it gets less criticism of the Fed and Treasury of providing bailout, and there's this idea of less moral hazard. It's private money to support a private problem. I think how we'll judge the success of it might be in about a week or two's time, if First Republic is still doing okay. I'm really kind of watching this one with a lot of interest. I should emphasize, however First Republic pans out, even if it turns out to be in more stress over the coming days, I am still not worried about the broader banking sector.
OK, and what about the Fed's balance sheet? We heard from Russell Ward. Your thoughts on the fact that we've seen the markets use the Fed's facilities quite extensively, and we've seen an unwind in quite a big chunk of that QT that the Fed's been doing?
Yeah, again, this is something we need to watch carefully. There's all this borrowing at the discount window, really an extraordinary amount. I'm interested to see how the updated data goes over the next couple of weeks. That is something that might kind of unwind quite quickly. So I think it's a little bit deceptive to say it's kind of unwinding all the QT, because it's a different part of balance sheet ownership. And I think it is something that can come down quite quickly again if there's a need. So I guess I don't like fence sitting, but on two issues today, both First Republic and the balance sheet, I am saying that we need to do a little bit of wait and see. But I think the overall backdrop conclusion is the same for both of them. We do not want to overhype either of them as a major systemic risk or a major problem, and markets will be okay next week.
Well, you don't sit on the fence very often, and you certainly didn't yesterday, so we will allow it today. And very nice green tie, by the way. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal if you want to stay across the Markets Live blog.